All right, good morning. Let me know if you can hear me out there, please. Okay, good. Give me 1 second. All right, that should be good. So we're here this morning for CB Consumer Confidence. Welcome to the 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the Trading Director for 10-Minute Trades. Please remember that all the trades we take, they're for educational purposes, and it is possible to lose money trading futures, so please trade carefully. And don't trade money you cannot afford to lose. What we are doing is educational. All right, the markets are getting ready to open. Markets open at 9:30. So it's a couple of issues that we're dealing with on this particular report. This is a report that has gone through a tremendous amount of testing. We've tested reversal trades. We've tested gold breakouts. We've tested trap trades on the ES and on gold. We've tested a reversal trade on the ES. So make a long story short, this is a report that years ago, it was a 50-50. It was a coin toss report using gold. And I don't remember, you got to really go back many years. I don't remember what we used to trade it with before we traded gold. I don't think that I have reports going back that far. I didn't even think of looking, to be honest, but since we're here, I've got a file full of old, very old DMMs. We didn't even call them DMMs in the old days. We called them HIRAs, High Impact Report Alerts. And then we changed it. So I've got a pre-DMM. I think it's going to be pre-DMM. Yes, it is. And even back in 2017, we were trading gold on this event. Okay. Here's 2017. Let me see if I can go back any further than that. So maybe this particular report has always been on gold. It's possible. It's certainly possible. Now, the furthest that I go back, I guess I started working here, must be 2016. That's my guess. 2016. Now, let me see if I have a consumer confidence report going back that far. I don't see one. I mean, I know I have one. Just give me a second. Let me see if it comes up. I want it to be in 2016, preferably. But I don't see one going back that far. 2017 seems to be the oldest. Give me one more second. So what we're dealing with, there's also a monkey or an elephant in the room today. So I've got one report here that goes back to 2016. The elephant in the room is new home sales, okay? New home sales do not normally trade with this report. And new home sales absolutely can move the market. Now, here's interesting. Now I remember. We used to trade the Japanese yen on this report. Now, we haven't looked at the Japanese yen in a very long time, but the yen definitely had a history of moving on US news. We used to have a history of trading the Japanese yen, okay? Now, so blessing the reversal is not, I don't recommend the reversal on this trade. And there is a video, I think we made a video last week on using the reversal trade on the YouTube channel. But if I have time, I'll go over that today also. So just out of curiosity, 2016, we were using the yen with a 3-tick bracket. Holy crow. 3-tick bracket. We didn't put targets on the report. All we had was a stop. It looks like we didn't even have time. We didn't have time. Is that possible that we didn't put time on the reports? That's hard to believe. We had the time of the report. I think in those days, we just automatically defaulted to 57. In other words, 9:59:57. 6J is what we traded. That's fascinating. Let's try and remember to take a look at the 6J. So Blessing is asking about how do you set up a reversal trade. The reversal trade is probably one of the easiest setups to set up. That's because there's not a lot to it. Now a reversal trade, let me turn off my webcam. I have to remember to turn, my webcam is defaulting to, my recording software is defaulting to webcam on. That's why my webcam is shooting on in the morning. I have to remember to change that, because it's only a matter of time that I get caught doing something stupid when I'm not expecting to be recorded, or I'm wearing ridiculous clothes. It's going to happen. It's going to happen. Now, if you're watching us on YouTube, don't forget, you can use freetraderoom.com, and you can come into our trade room all week this week. freetraderoom.com if you're watching on YouTube. Okay. There's no delay when you do that. So to set up, let's say you wanted to set up a reversal trade on the ES, because the DMM mentions a reversal setup on the ES. All right. I've tested this reversal trade. It's not working right now. I don't recommend it. I think it just needs to be probably removed from the DMM. It's just not been strong enough. But let's say it's been reliable. So to set up a reversal trade, you enter the strategy on the chart the way we always do. Right click, double click the strategy, then make sure that the trade type, the key is the trade type. If we're saying reversal, if we're saying one-click range trade, that means you have to change the trade type. There's different settings, different setups, okay? Trade type, when you choose reversal trade, okay? When you enable a reversal trade, you'll get buttons. But so what you need to set up on a reversal trades are entered manually. Time does not matter. Brackets do not matter. Nothing matters except choosing how many positions. So let's say you're going to have 2 positions and choose your targets. So you choose your targets and you choose a stop. That's it. That's all you need for a reversal trade. How many positions, what your targets are going to be if the price reverses, and how much of a risk, how big your stop is. Apply it. What I recommend that you do on a reversal trade, on the label it, especially if you're working on another setup at the same time. Reversal goes on the label, apply it and okay it. Then when you enable a reversal trade, the definition of a reversal trade is you get a long button and a short button. They put you in the market immediately when you click them using the targets, the stops, and the number of contracts, positions that you traded. So if I wanted to reverse the price right now, I would just click the short button, okay? And my orders I'd be in the market short immediately, and my first target would be 5 ticks. My second target would be 10, and I would have a stop. So if price reversed and it hit my target, the reversal trade would work. Now, I don't really want to get filled, but that's how it works. So I click reverse short. There's my targets. There's my stop. All the buttons work. Everything works as if it's a regular trade, because it is. It's just a different setup, okay? The combined button works, just a different setup, all right? That's how you use the reversal trade. Very, very simple. That's it. There's nothing else to it. You can use any of the features of the software that you want, okay? Any of the features are allowed. But setting it up is rather easy because all you need is positions, targets, and a stop. Understanding that you enter a reversal trade using the buttons. It's not automated. That's a reversal trade. So today, this report, while it looks like it's a little bit better than a coin toss, it's been very inconsistent. And like I said, what we're dealing with today is new home sales, Richmond manufacturing, and CB consumer. The one time recently, hey, good morning, Mark. The one time recently that CB traded the same way it's trading today, which it rarely does. So when a report rarely trades the way it's trading, you don't have the ability to test. If you don't have the ability to test, you don't have the ability to have a valid, trustworthy setup. And that makes a report a coin toss. Today, I'm telling you that new home sales is a strong enough report many, many months that it could trade by itself. So it could have an impact on the price and on the movement at the time of consumer confidence. Now, clearly, consumer confidence is stronger as a setup, as an impact for data, because the market really looks like what the consumer is thinking. But new homes could have a bearing. Richmond, not so much. Richmond is often early. But the point I'm making here is when you have inconsistency, then you really need to not put your money on a specific report. I don't have much interest at the moment in trading this live because of the inconsistency and also because of the issue of new home sales being the elephant in the room. We just don't know what kind of effect we're going to get from it. I don't think it's going to be huge today, but it is there. It's something you have to deal with. There was one now going back to May, June, July, August, September, October. It's almost half a year ago. I don't consider the markets in May similar to the markets today. They're just not. They're not the same markets. But this is what happened 5 months ago when consumer confidence traded with new home sales and Richmond manufacturing. Watch the right side. That's the breakout. Now, there is something I would do today, slightly different. We were testing the trap trade on the left. Now, if you notice the breakout with gold, the news, Richmond was early. It doesn't even look like the main news came out. New homes is now out, okay? New homes came out and they were negative. Richmond was negative. and then consumer confidence was negative. All of those three negatives most likely pushed gold up, and the breakout worked that month. Now, that takes a little bit, it's a little bit of luck to get all three reports the same direction, because the same sentiment is the right word. In other words, negative, negative, negative on all three reports. You can't always expect that to happen. And we also have an ES trap trade that we've been testing on this setup. And again, it's a setup we're testing. So I'll show you how to set that up. So here's what I would do today. Don't let me forget to look at the yen. Somebody please remind me to look at the yen, just out of curiosity, because we used to look at the yen all the time, and we have not been looking at the yen at all. So I'll make a note too. Try and remember to look at the yen. So the first setup that I would set up is the breakout on the left chart on gold. Now, my notes, just like with University of Michigan, my journal notes say that our bracket have been too small on some of the small reports. We've been getting whipped on some of the small reports. So my notes say clearly, use a bracket of 8. Use a bracket of 8 on consumer confidence. Now, given the fact that there's also new home sales, I don't have any problem adding 1 tick to the bracket. Okay, and what I'll do is I'll reduce my target by 1 tick, my first target. And because there's also new home sales, I'll have a second target slightly bigger. But again, this for me is not a live trade because of the inconsistency and the fact that even though it looks not bad in the DMM, I just know how difficult this report has been for trading and getting a profit. It really has not been a great report for profit ever, maybe in the history of the report. That's the truth. Now, sometimes reports make a comeback or they start getting really, really good. We're seeing that with different reports. So, you know, maybe consumer confidence will make a case for being a tradable report. Right now, I'm just not interested. The risk, in my opinion, is not worth the reward. But obviously, we're always interested in testing, and that's why we're here. It's an important report. It's nobody's fault that consumer confidence hasn't been consistent. That's not anybody's fault on various indexes. So the bracket I would use is 8. And then because I'm slightly increasing the bracket and I have the ability to use a 4-tick target on my first target instead of 5, if the bracket's bigger, it makes no difference because our target is shrunk by 1. So basically we're doing the DMM the same, but we're taking a tiny bit more safety by having a tiny bit bigger bracket. It's not a big deal, but 1 tick sometimes can make the difference between getting filled and not getting filled and having a good trade versus a losing trade. So my target, I would make 14 new home sales being in the mix. My stop will stay the same. And then what's interesting is the entry time is 10 o'clock on this report. And that's, I think, another issue of this report. I think we have to go back to the drawing board with testing on this report. Honestly, that's my personal feeling. It needs more testing. It just hasn't given us a reliable setup. So that's the gold setup. Now I want to set up a quick ES trap setup, trap trade on the ES. So my breakout is there, and that's the only trade I need set up so far. Okay, so I've got a breakout set up 4-tick target, 14-tick second target. And then I'm going to use the trap strategy, and I'm choosing trap trade version 3, and I'm testing a new version. The way you set up a trap trade, keep in mind what a trap trade is. We expect the price to go one direction. If it goes up, we sell. If it goes down, we buy. It's a trade we're expecting not to move steadily in one direction. It's the opposite reaction of a breakout trade. Price at the time is the bracket center. You don't have to change that. Average price bars, you don't change. Position size 1 should be a 1. Position size 2 should be a 1. Wait for spike is a default. You don't change it. Stop loss should always be last fill price. It should never be average price. And then I do my stop last. My first target, and this is an ES trap trade, my tiers, okay? My tiers, and just bear with me, I want to make sure. So what I'm going to choose for my tiers, and tiers are your brackets. They're your orders. That's how far from the current price our order is going to be placed on the chart. I'm going to use 4 ticks and 8 ticks. Bear with me, 4 ticks and 10 ticks, okay? Those are my tiers. The entry time, all that means is what time does the report come out? That's important. What time does the report come out? That's the entry time. The report comes out at 10 o'clock. What puts our orders on the chart is the preparation seconds. I take 5 seconds. I'm only going to use 5 seconds before 10 o'clock. My trap trade is going to show up on the chart, my orders. So order prep is very important because it determines when the orders are going to show up on the chart. And then the last thing I set is my stop. My stop is 8 ticks. So price at the time, going from top to bottom, average price bars is a default. Position size is 1 on 1. Position size 2 is a 1. Wait for spike is a default of 5. Stop loss position is last fill. Bear with me, I want to hear the news results. Last fill price, stop loss is 8. Tier 1 is 4 ticks. Tier 2 is 10 ticks. The entry time, what that means is what time is the report? It's 10 o'clock. And order preparation means how long before the report, when are we going to put our orders on the chart? 5 seconds. And then I don't need a label. I'm just going to shorten the label. It already labels it a trap trade. Yes. Okay. That's all I need to put on the strategy. When you enable a trap trade, nothing happens except you get a different logo. And 5 seconds, let's check our time sync. All right. See if the computer's in sync. We go to the website time.is to see if we're in sync. Now, don't forget, folks, so we're 8 seconds ahead. If I can get my dimension 4 going this morning, I'll use it. 0.8 seconds is not very much, but I like to be in sync. Let me give my dimension 4 a couple of seconds to get going. What was I going to say? The breakout using the slightly bigger bracket is what my notes definitely are showing for some of the small reports. So that's why I'm going with that slightly bigger bracket. And I'm just waiting for my dimension 4. We got plenty of time. It will let me adjust my time. So it is too bad that there are, there's always been coin toss trades. We've always had them. All right, my dimension 4. The difference is in the old days, we used to trade a lot of them. We traded, in the old days, we traded way more of them. We're much more careful with them now. So dimension 4 looks like this. When dimension 4 comes up, you click the Sync Now button and you watch the Synchronized button. And what happens is when you click the Sync Now button, the synchronized line changes because it's syncing to the location of the server in the location field. It's very simple. You don't really have to do anything except click the Sync Now button. The synchronized line will change. And now you'll see you go back to time.is to verify your sync, that it worked. And now I'm in sync. Dimension 4, I don't think we've ever seen an instance where dimension 4 didn't work for me in the room. So in other words, if I go to time.is and I'm not in sync, I use the tool dimension 4 to put me in sync. Okay. Now our next trade room is 3:30. There is no late evening trade room today. If you look at the DMM, it's terrible. There would be no way under any circumstances I'd be trading the report. And there's no point in wasting people's time late at night. Okay. So I don't want to waste your time. I'm just going to watch that Australia report. There's a possibility because it's a consumer price report that it could move, but it's a quarterly report with Australia. And whether it moves or not, its history is just awful for the past couple of years. So that's why there's no room at 8 o'clock tonight. Now, so new home sales, they are expecting sales are pretty decent. Sales are decent. They're expecting consumer confidence to be a little bit lower than last month. Anything over 100, though, is considered decent to good consumer confidence. But what I was saying is at 3:30 today, we've got multiple events. We've got earnings, what is it, Google and Microsoft, I believe. And we'll talk about that at 3:30. And then we also have API, the oil report. So 2 events that we'll be working on this afternoon. That's at 3:30. So we're just waiting. Got about 4 minutes. The ES trap, it's been working somewhat. I mean, we tested it. We didn't use it last month. We used a breakout last month. Last month, the breakout on consumer confidence was better than other setups. And that's the issue. That's the big issue we're constantly dealing with on this particular report. Inconsistency. We've struggled so hard to find a reliable setup. Now, you know that there's reports, even if they have a bad month, you don't feel it has anything to do with your setup because it's a report that trades reliably. So there's many reports that fit that reliable trading bill. And some of them, maybe their risk profile is very high, or maybe their ability. Sometimes you have a report that looks like it wins regularly, but then when you dive down deep into the setup and the trading, you find out that yes, it shows up as a win, but a lot of times it might only be target 1. Now, if a trade only wins target 1, that does not give a good opportunity for lots of profit, because target 1 trades have stops, right? So you don't always move your stop if it hits target 1. If that happens and you don't move your stop, a target 1 trade very often might not even be a winner because your target might be smaller than your initial stop. So you have to understand how to read the reports well. And I always feel, I don't have to tell you this, the best thing to do is test and or look at previous videos of the reports to see exactly what's been going on. And I almost always, sometimes if I don't show the videos in the room, that doesn't mean I didn't look at the videos, because a lot of times I'll look at the videos no matter what. So it's important, it's helpful to see how a report's been trading. That'll always give you a good idea. But coin toss reports are the most difficult reports to deal with, because people always think, oh man, we should have traded that, because the week that you test it, sometimes we don't have a trade room for a coin toss report, although I'd say lately we've been having a lot. But sometimes you don't have a room, and whenever you don't have a room, a report always does great, because that's the nature of crazy trading. But the coin toss reports, it's just as the word says. They don't give you a good opportunity, because one month they win, the next month they lose, one month they win, maybe they're dull one month. All right, let's watch the news and see what comes out first. Now, Richmond has a tendency to come out early, okay? 5 seconds before 10 o'clock, Richmond just came out. Very positive, very positive. You don't see much of a reaction in the markets, though. So we don't let Richmond scare us out of a trade. So here's our trap trade. You see there's orders above. We got orders above, and there's our breakout. So I'll tell you why this worked. I'll tell you why this worked. It's very obvious why it worked. Very obvious why it worked. I'm watching the trap. So the trap trade got filled on one side. You see, it's only one position. It's not looking like, although the news, so you got two very strong positive reports, okay? What I'm going to do is cancel one tier, okay? Cancel. That says cancel the outer tier. My outer order disappeared. I'm going to move my stop to break even plus, so I make money, and bingo, all right? I would have made money on the trap on the ES as well as the breakout. Let's analyze both trades while we're here. Both trades worked. What's interesting is it might be let's look at the yen before we go anywhere with the video. Now, I don't even think I have the yen in. So enter an instrument. Go to Tools, go to Instrument Lists, click on Futures, so the instrument gets put in the Futures folder. Click on Add, and I'm going to add the Japanese yen, 6J 1221 is the current contract. Okay, it's in the list, so it tells me it's already in the list. I'm going to change my chart to 6J. And I would say, let's put our cursor, our crosshair on local. That was our trade candle. You have on good news in the US, the yen goes the opposite way. Probably would have used a 4-tick bracket, okay? So let's say, for argument's sake, my fill was somewhere around 605, 6 to 8 ticks of movement, 6 ticks, and that's about all it gave you. That's about all it's giving you. Okay, it looks like it's reversing. Now, it looks like maybe the yen might be worth looking at again. It's possible. Might be worth looking at again, because it did move the way we want the yen to move. When the news is good, the yen is similar to the way gold used to move very often. Good news, pushes gold and the yen down, and it's working. The yen is trying to push down still, okay? So look at the news. Very good consumer confidence, very positive, really positive new home sales also, and very positive Richmond. You had all three news elements banding together to give you a great breakout trade. And look at the quick reversal, okay? The reversal was pretty quick, going back to the ES. Now, if you look at the ES chart, at 10:01, ES went down, and then it did reverse. So maybe the reversal would have worked today. So there's actually three setups. And that's part of the problem, is how do you got to do so much testing to decide which setup is the best setup. So here's what I would think very possibly for next month on consumer confidence. The breakout looks like it's starting to work again. So I would head towards a possible consumer breakout, going back to the normal breakout trade. That's what I would be my first leaning on gold, as it looks like it's working. And my second setup might be the trap trade on the ES, okay? Trap trade on the ES. Let's look at the video, and you can see how good the various setups worked. Now remember, you can always torture yourself and saying, oh, I should have traded it, I should have traded it. You can't worry about it. You can't worry about it. Maybe you don't, you don't know how good the news was going to be. We don't have a way of knowing that. There's no way to know. Okay? No way to know. Now, blessing, you also had the trend of gold on your side. In other words, gold has been trending strongly down since the open. It reversed about 50% of its opening move down, but then it started trending down again. And then when the news came out, good news helped to push gold down even further. Okay, so gold looks like it's trading in the direction of the trend. The ES is up, but the ES was kind of choppy if you think about it. The reversal worked and the trap trade worked. So that leads me to believe that the ES is less directional than gold was this morning. But let's look at the video and we'll be able to tell in 1 second. So here's the video. CB Consumer. Go to the time of the trade. So our breakout, what made good sense on the setup was to figure that new homes, if the news agreed with consumer confidence, might play a part in helping to push the direction in the same direction. So I think new homes helped. All right. So Richmond came out early. You could see our orders weren't even on the chart, not even the trap trade. Richmond came out right there 21 seconds early and did not do a thing to the markets, but it was very positive news. It was positive. So then you wait. It didn't scare us out of a trade. Didn't do anything. Then our order gets put 5 seconds early for the trap. And then watch the breakout first. The breakout, now remember, we put our orders on at 10 o'clock. Gold shoots relatively slowly in one direction, allowing the breakout to be perfect, and goes way past our targets also. way past our targets, making me think that, you can use a bigger second target. You could even trade 3 positions. You could do something like 5, 10, and 17. It was good moving report. Now, if it just trades by itself, I'd probably keep the targets where they were, maybe a tiny bit bigger on the second target. But it doesn't sustain the direction right after the report, but gives you plenty of time to make money. Plenty of time. The breakout works perfectly. Why? The news was all strongly positive. Strongly positive. Okay? The trap trade. So once again, how does a trap trade work? So you can see the first thing that happens in a trap trade, the 2 tiers, they're just orders. They are above the arrow, which is the current price. Remember, they were 4 and 8. So you have a sell above the price. Price goes up, you sell. Price goes down, you buy. And then your stop is there also. So the trap trade is expecting price to gyrate. You want it to go up and down or down and up. What happens is we get filled. First, it has the move down. The move down, watch what happens. Right before the move down, it touched the short order. Okay, right there. It filled us short. Almost before the news came out. Almost before the news came out. Okay. 10 o'clock. It pops up a little bit, fills you short. Then the news comes out. Doesn't look like there's a serious danger of it hitting the stop because it doesn't even hit the second tier for our second possible reversal, right? So the trap trade has a button called cancel outer tier. It just shows up as cancel. If that outer order doesn't get filled, cancel it. Now you can wait 30 seconds, 40 seconds, give price a chance to show you if it's going to fill that order. Okay? It doesn't fill it. It's clearly reversing because it's almost getting ready to give you a profit. So you cancel that outer order by clicking the cancel button. You might as well move your stop to safety so you don't lose money, and bingo, it hits the first tier and you made $100 extra on the trap trade. Okay. The importance is that you've got 2 possible setups that appear with all our testing to be working. Okay. The trap, we can certainly try it next month. I think you could always do it on the MES with pretty low risk, trading micros. And GC, it looks like it's starting to work. Now you've got like 5 out of the last 7 that are working, right? If you look at the DMM, let's look at the DMM. If we add today in, if we put today in, put another win, you've got 1, 2, well, look, you got 5, 1, 2, 3, 4, 5 of the last 6. 5 of the last 6. Okay. I'm not prepared to make this a family trade because too much consistency over time, but probably we'll trade it next month. Probably a tradable report. Okay. Look, maybe I was too conservative today. Maybe it could have been traded today, but I'm being conservative because we're on a brand new account also, and I want to build it. So you don't know. You just don't know. CB Consumer's been too inconsistent. Any questions? Anybody have any questions for me? Otherwise, we will be back here at 3:30. 3:30 for two events, earnings and API. Anybody? Everybody good? Who else traded? Tess, what kind of trade did you take, Tess? What kind of trade? So look, there are folks in the room that always take, not always, but often trade the setup. You know, they trade the setup. And, you know, they tell you when they've had a good trade. And don't let it make you feel that you missed out. There's always trades to take whenever you're ready to take any trade. Don't ever feel that you missed out. So I want to thank everybody. I want to remind everybody that I have a webinar on Saturday, and you can register. It's a multi-company webinar. Register www.fmt2021.com. It's Saturday. I'm on at 3 p.m. Eastern time. I believe the webinar starts at noon. Okay. And there's at least, I think there's 7 or 8 companies. A lot of people. So if you'll register for the webinar for me, that would be awesome. Really appreciate it. I want to thank our YouTube folks for watching. Remember, you can use freetraderoom.com. You can come visit us in the trade room this week. So I don't see any questions. So I'll see everybody at 3:30, and we'll figure out what to do with the earnings that are coming out today. Okay? So I'll see everybody this afternoon. Take care, folks.